Hi, welcome back. More conversations with the management that have reported their quarterly earnings, and Dhanuka Agritech is the next one in focus. The numbers reveal that the revenue is down almost 13%, 462 crores. Profit is down 35% year-on-year basis. EBIT margin has also taken a hit to almost 11.67% versus 15.7%. But then let's know more about the numbers. Mr. M.K. Dhanuka, Chairman, Dhanuka Agritech Limited, has joined us. Hi, good morning, sir. Welcome to the show. Let's talk about the volumes first. Declined almost 13% year-on-year basis in Q1 FY27 due to obvious reason delayed monsoon, which also further led to demand weakness. Have sales improved in July and early August as rainfall looks like has now normalized? And also, what are the new trends that you're looking at?
You see, June, there was 40% shortfall in the rainfall.
Right.
So it has impacted the overall industry growth, and the sowing was delayed. Although some improvement has been seen in the month of July, but that is also not sufficient to cover up the loss which we have incurred in the first quarter. But we hope that by the year end, we will be able to meet out the shortfall, and we will have a lower single-digit growth by the year end.
Right. So also you have reduced the FY27 revenue guidance from low double-digit growth to low single digits and lowered the margin guidance too. So are you now confident of achieving this target? Do you see a downside risk still?
The downside risk we have seen, that's why we have revised our guidance and lowered the guidance from double digit to single digit, lower single digit growth only. And EBITDA margin also we have reduced to 200 bips from the last year EBITDA margin.
Mr. Dhanuka, is price competition to a concern now, or is this largely from generic products or domestic peers or Chinese imports?
The Chinese imports definitely play an important role because we import a lot of agrochemicals from China, because China is the biggest producer of technical grade pesticides, and still India is dependent to a large extent on China. So China is having the impact, but overall impact, major impact is from Japanese products, because we have a major share of the weedicides, which has impacted especially the soybean and the cotton weedicide segment.
Right. Now, earlier you had planned price hikes, but they couldn't really sustain. So another round of price hikes perhaps coming?
No, because the demand is less and the supply is more. So overall the prices are reducing. There was only 1 month in the month of April when because of the West Asia war, the prices shoot up. But from May onwards, the prices start declining. And right now also the prices have declined, and from 1st of August, we have reduced the prices in 20 of the molecules out of the 100 molecules.
You also indicated channel inventories remain normal, but are distributors cautious in placing fresh orders since demand is weak?
Yeah, when the prices declining trend is there, the dealers are basically cautious in placing the order because they presume that the prices can further fall. So that's why they don't create inventory and they wait and watch situation.
Right. So, Mr. Dhanuka, you are expecting a recovery towards the end of Q2 and also in Q3. Now, what indicators really give you that confidence in that outlook?
It is expected that the water levels in the reservoirs are also around 50 to 60% level, and wherever the irrigation facility is there, so we will get the green patches to work in those areas and get the sales from those areas. And insecticide, we hope that because of this July rainfall, the consumption of insecticide will increase and demand for insecticides will be much higher in the month of August and September. So these 2 months are crucial for the agrochemical sales, and we hope that we will be able to cover a large part of the deficit in the month of August and September.
You plan to launch 5 new products this year. What revenue contribution do you expect from these launches in FY27 and FY28?
You see, it takes time to basically establish the new molecules in the market. So very first year, we don't expect major revenue chunk because at initial stage, you have to train the farmers that this new product has been introduced by Dhanuka. So they will use, and when they will see the results, then the basically mouth publicity from one farmer to another farmer, and then the volumes start coming. So from 28 onwards, we hope that the major volume should start coming.
Also, now, Mr. Dhanuka, what is the strategic rationale that you seem to have behind the Nagpur manufacturing facility? What are you what will this be used for?
We are putting up a new facility at Butti Buri in Nagpur industrial area. So we have acquired 15 acres of land over there. And shortly after getting the requisite approvals, we will start the construction over there. So we hope that by the first quarter of FY29, we will be able to start the manufacturing over there. The approximate investment in the factory will be around 200 crores. We are putting up this new facility of world-class standard with a lot of emphasis on the automation.
Mr. Dhanuka, you're hoping that will work out very well for you. Well, thank you very much for joining us at the moment.